Welcome, guys. Welcome. We'll get started shortly. Welcome. Welcome, everyone. Welcome, Bill. Welcome, Travis. Cece, welcome.
Hello. Okay, thank you.
We'll get started shortly. Welcome, everyone. Danielle, welcome. Welcome, everyone. We'll get started shortly.
I know.
Welcome, Ann. Welcome, guys. We'll get started shortly.
Hello.
Welcome, everyone. We'll get started shortly. If you don't have the 4 market phases on the screen there, you should take a picture of that. Called the 4 market phases that every trader should know. So take a picture of that with your phone. I recommend you print it and laminate it so that you have it. The 4 market phases that every trader must know. We'll get started shortly here.
Accumulation distribution declining. Range after 6 month decline. long period of consolidation, 200 MA flattening, breakout from accumulation, terms of uptrend price above, accumulation, advancement, distribution.
All right, guys. We'll go ahead and get started. Can everyone hear me okay?
Yeah, I can hear you.
Yes, I can hear you.
All right,
Yes.
awesome. So we'll go ahead and get started. This evening, we'll go over stocks, the equity markets, the indexes, some of the sectors, and we'll also take a quick look at Bitcoin, see how that's trading. It's reaching a critical point, so we'll take a look at it. Do you guys see the chart there on the screen? It says the 4 market phases that every trader must know.
Yep.
Yes.
All right, so those of you that do not have that, this will be critical to your success. So these are the 4 market phases that every trader must know. So take a picture of it with your phone. I would recommend printing it out and laminating, having it laminated, kind of just like this here, so that you guys have it here. I would keep it near your area that you use to trade. All right, so let's go over. I want to take a quick look at Bitcoin. So I'm going to share my screen here with you guys. So this should be Bitcoin here. So right now, if you look at your 4 phases, okay, so this is when we look at charts, guys. So it doesn't matter what chart it is, any chart, right? So we always want to follow the 4 phases. So if we're looking at Bitcoin right now, so Bitcoin and the price action is happening right here, all right? What phase would Bitcoin be in currently? What phase is this?
Declining.
Declining, very good. Declining, and also I'm going to get you guys another chart. Hold on one second here. There's another chart that works really good too.
Advancing, distribution, subtraction, accumulation, decline, accumulation.
All right, so take a picture of this chart right here also. All right. All right, so take a picture of this chart here. You guys see that?
Yep.
Yes.
Yes.
Okay, very good. Okay. All right. So this is the declining or markdown phase. So declining or markdown phase. Okay. Every time price breaks a support like this purple line here on Bitcoin. So let me change that. So you guys see my screen, the Bitcoin screen. So you guys see Bitcoin now? You see the chart here for Bitcoin?
Yeah.
All right, good. So this is in the declining phase, guys. Declining markdown phase. So we should not be buying. All right, we should be out. Okay, or we can short. All right. So right now, the critical concern right now with Bitcoin is that it's testing this support. So if it breaks this support here, this line here, that's redistribution, and price will go lower to the downside. Okay. So we are watching Bitcoin. If it breaks that support, right? And remember, it's in the what phase? The declining phase, right? Or the markdown phase, right? So we should not be buying. And we can use this, the 4 market phases, guys. This, just knowing this alone will give you a major advantage when you're trading, just knowing the 4 phases, okay? just knowing the 4 phases. So if Bitcoin breaks this area here, which is right at 47,000 and change, it could get all the way down here to 40,000, right? If it breaks this area in here, that 40,000 mark, right? That's redistribution. It can get all the way down to 30,000, and that's the way the market works. Okay, it's levels, right? Different levels. All right. So when it's in the markup phase or advancing phase, we want to be buying. All right. When it's a declining phase, okay, declining phase or markdown phase, we want to be out, okay, or shorting. All right. So we'll be watching Bitcoin closely towards the end of the week tomorrow into the weekend, but it's at a critical point. All right. Let's take a look at the markets. So the Vix Volatility Index, as you guys know, we use the Vix, okay, to find out whether there's volatility in the market. Okay, and all you guys need to know is that when the volatility increases, so right here, when the volatility increases, okay, stocks will go down. Okay, when the volatility goes up, see here, the VIX Volatility Index. So when the VIX goes up, stocks will go down. When the VIX goes down, stocks will go up. So we want the VIX to stay low. Okay, so right now the VIX is at 21.58. So it's come down a bit. It was much higher. It got up as high as 35 right here. So it's come down a bit. But stocks are still somewhat undecided, and we'll take a look at the indexes shortly. All right, so just remember, all right, so we always want to every week, we want to pay attention to what the VIX is doing when we trade stocks. So higher volatility, like right here, this is 2020, when COVID hit, the volatility spikes, the market went down, right? So whenever there is a spike in the volatility, any big moves in the volatility, bad for stocks, okay? Low volatility, see right here, low volatility, like right here, very bullish for stocks, okay? So this is a barometer. We can use the VIX as a barometer for the entire stock market, all right? So always keep that in mind as equity traders, okay? The Dow, we also always take a look at the Dow. So before we do anything, guys, we want to know what the VIX is doing. We want to know what the Dow is doing. And you guys have heard of the Dow before. So the Dow Jones Index, right? So what the Dow is doing. All right. So right now we don't have a buy signal. This blue arrow here is our buy signal. We had a sell signal in the Dow. So we kind of in no man's land right now. So price is consolidating between support and resistance. Okay, think of support as your floor, right? Your floor support. So price is holding support. And think of resistance right here as your ceiling, right? So here is resistance. I would say right here is resistance. So that's your ceiling here. So price is caught between this area in here. You guys see that? You see support and resistance clearly here?
Yeah, so.
Okay, very good, very good. So we are hoping that the Dow can break above these resistance here and then give us a buy signal, and that would signal that buyers are back in control. Buyers are back in control. Okay,
David, you indicated the resistance where you did because it's at 2 points instead of going all the way to the top. Is that right?
Yeah, so right here, we wouldn't call this resistance right here. We would just call that a high. Okay, so we want resistance where price is kind of consolidating. See here, you see where price is consolidating in this area in here? Price is consolidating in this area, that's resistance. This is just a high, and it never really had a lot of consolidation. So really here is your resistance right here.
Okay.
Excuse me. Hello, David. This is my first day. I want to know what indicator you are using, and is this a daily chart?
Yeah, this is a daily chart.
Mhm.
And all we are using on the chart here is our moving averages.
Okay.
So we have two moving averages here to separate price. So we separate the buyers, the longs, right? The green candles from the sellers, the shorts, the red candles.
Okay.
Okay.
So yes. So the green is maybe is it like a 12-week, 4 weeks? I mean, moving average. The green and the red.
Exactly. And then we've got built-in support and resistance. So the yellow, we've got yellow support and resistance, and then purple support and resistance. The yellow.
Okay.
Go ahead.
To see this, I have to use the trade station, right? Because I usually use TD Ameritrade.
Yes. So yes, the systems are run. We run the system on the TradeStation platform. Yes.
Okay. Thank you.
You're welcome. But this is a simple. So we don't use any that MACD or stochastics or anything like that. Just clear support and resistance, moving averages, and then we pin the candles, right? So the green candles, we know that buyers are in, right? The white candles, that means price is consolidating, and then the red candles, that means that sellers are in. All right. Good question. Thanks. All right. So that's the Dow, right? So we can tell that the Dow is not trending, guys. It's kind of caught between this support and resistance. So not good for stocks. Okay. The S&P looks a bit better. Okay. So we are in an upward trend with the S&P. Let's see here. So right here, we're in an upward trend. All right, so it held this support here, and our price is holding right between this support and resistance right here for the S&P. So right here, and we always need to know what these indexes are doing, because 80 to 90% of your stocks will follow the indexes. So if the indexes are moving higher, your stocks will move higher. Okay, if they're not, guess what? If the indexes are bearish and they're in the declining phase or the markdown phase, so will most of your stocks. So right now the S&P is caught between this resistance right here and this support right here. Okay, so here is the price right here. It looks really good. It looks good to break. So if it breaks this resistance, we'll get a buy signal, and that's good for stocks. Okay, and hopefully, if one or two of the indexes move in either direction, the other indexes will follow. All right, so as a trader, guys, it's always good to even if you're new to trading, always know what environment stocks are in. Okay, and like I said, the VIX will tell us, and these indexes will also tell us a lot. Okay, before we start trading. All right, so let's take a look at, this is the Nasdaq. So here is support here, right? Support on the Nasdaq. Here is resistance, and price is right between support and resistance here. We got a white consolidating candle here. You guys see this? You guys see this
Yes.
white candle here? So hopefully price will hold and then break resistance. If the market fails, guys, if price fails, okay, so if the Dow, the S&P, or the Nasdaq fails to break resistance and move higher and break support, guess what? We'll move, the market will move lower. All right, so right now it's in kind of no man's land. This is the Russell index. So we started to watch the Russell just recently, and it's kind of caught between this support in here and this resistance. So not a lot's happening right now. Okay, so not a lot's happening right now with equities. If we look at the different sectors, so remember this, write this down, guys, write this down. So we always want to look at the VIX, the VIX Volatility Index first. Then we want to take a look at the Dow. We want to know what the Dow is doing. We need to know what the S&P is doing.
Mhm.
Okay, we need to know what the Nasdaq is doing. So the Dow, S&P, and Nasdaq. And as a bonus, we can look at the Russell. All right.
Okay.
And then we want to take a look at the indexes. So we want to know what the sectors are doing. Okay, so the sectors are your individual where your stocks will be held. Okay, so for instance, like your biotech. Okay, so let's say the technology sector. So all your computer companies, like your tech, right? So your tech companies, your utility companies, your energy, all those sectors we need to know, because those are where your stocks are going to be in either of those sectors. Okay, that makes sense?
Yes. Uh-huh.
Okay, very good. So we need to know in real time, guys, in real time, whether these sectors are in any of the 4 market phases. Okay, so we need to know before we trade any stocks, what phases these sectors are in. All right, so for instance, if we are going to trade a financial stock, okay, like a bank, let's say, right? And here is the financial sector right now, right? What phase is the financial sector in currently? What phase is this?
It's declining.
It's declining. Okay. Okay, it's declining. Very good. It's declining. So it's a bit tricky, but you're right? It could be in the distribution phase, but it's kind of left the distribution phase, but it is in the declining phase, right?
Yeah.
So what would happen with most of the stocks, financial stocks within that sector, within the financial sector? Would they be going up? Would they be in the advancing the markup phase or in the declining phase?
They'll decline too.
Very good. Very good. Very good. So that's easy, right? It's very easy to tell, right?
Yeah.
How about healthcare? Let's take a look at healthcare, right? Healthcare, what phase is the healthcare sector in right now?
It's going up.
Going up, yeah.
It's
Advancing.
going up.
Advancing.
It's an advancing.
Yeah, advancing.
Okay. Let's do this here. All right. And as you guys as you do this more, it will become easier. But we want to do this. We really want to. Okay, so here was our sales signal. So this was in the what phase? What phase was this?
Markup.
That's advancing.
Markup, advancing, very good. So if we take a look at this now, take a second look at this. What phase is this right here?
Well,
That's distribution, right?
Distribution, very good, guys. Distribution, okay. Now,
can you expand more on why is that distribution?
okay, so if you look at your chart, your distribution chart, okay, so it's neither going up or down.
Yeah.
Okay, it's kind of consolidating, right, between support and resistance. That's distribution. Okay, if it breaks this resistance, okay, if it breaks this resistance and let's say it gives us a buy signal like this, then what phase will that be?
Advancing.
And advancing.
Markup.
Okay, very good, advancing. But I gave you a second chart. What's that second chart? You guys see that second chart I gave you?
Yeah.
Markup phase.
Distribute.
Markup phase?
Markup phase, but look at it's called the what?
Oh, the
Reaccumulation.
Reaccumulation. Very good.
Reaccumulation.
Yes.
Oh, I see.
You
Okay.
see that? Okay.
Yeah.
So
that's after it breaks resistance.
Okay. What's that?
No, I was just confirming that's after it breaks resistance, then it's a reaccumulation, right?
Reaccumulation, which means new buyers are coming in. New buyers are coming into it. Yeah. All right. Now, what if it breaks support here? What if it breaks support and gives us a short signal, or just break support? What phase is that?
Markdown phase?
The
Yeah, got-
markdown, very good. The markdown or declining phase,
Yeah.
okay? You guys see why this is important to know?
Yes.
Do you always refer to the daily chart, David?
You can use this on any time frame, okay? But I like the daily when I look at market, how the markets are performing. The daily chart works best because first of all, you don't have a lot of noise, so you can the price is clear, and you know, the hedge funds and institutions, all the money managers, that's what they use. They use the daily chart. Okay, so we want to follow what they follow,
Okay.
right? You don't have to trade off the daily time frame, right? You don't have to trade off it, but your analysis, when you look at what the market condition, absolutely the daily. Anything less than the daily is too much noise. Anything higher than the daily is just too much information. All right.
Okay.
Okay.
Okay, so if we wanted, let's say if we wanted, so remember the VIX, we want to always know what the volatility is like in the market. So the VIX, we want to know what our indexes are doing, whether they're up or down, okay, or kind of neutral, okay. And then we want to know what the sectors are doing. Okay, so we have a few sectors here that are up. So here is home construction. So what phase is home construction in? What phase is this?
It's definitely advancing.
That's markup, right?
It's definitely advancing, the markup phase, absolutely. This was reaccumulation, so it broke this resistance here. That's reaccumulation. So we could have added to our position here. Okay, so that's reaccumulation. This looks very different. This sector here, okay, U.S. home construction looks very, very different than this one, right?
Yeah.
Right. So we wouldn't put any capital to work here. We would wait on this one, but guess what? Boy, we can certainly make some money here, right? So you see the importance, right?
Yeah.
And then here, U.S. home builders, that's another one right here. That's up. Okay, it's in the markup phase, right? Markup phase, advancing phase, right? And then technology stocks. What phase is this right here? What phase is this?
It's also advancing, I will say.
That's advancing, and it's looking to test. We've got, it's hard to see right here, but we have a resistance line right here. So if it breaks this resistance line, what phase is that?
Reaccumulation.
Reaccumulation, very good. So you can look to add. Always at reaccumulation, we always want to keep adding to our position. Very, very good.
Okay.
Okay. So how do we find our stocks? So we know that the three sectors that that's looking good are home construction, home builders, and technology. So then we would go here to see if we can find any stocks within that area. Okay, and this is our heat seeker. So heat seeker tracks about 20,000 stocks every single day, and it will give us these stocks in these particular sectors. Okay.
Okay.
All right. So right now we don't have any in those sectors, so we would wait. Okay. These stock boss is for stocks that are $6 and under. So $6 and under. And then we would go here to our bull master, which is stocks that are $10 and higher. So $10 and higher. So we have some here. So here is some construction stocks here. So let's take a look and see what we've got here. Okay, so we've got something here, right? So these are the sectors. These are the three sectors, right? So well, look at this here. There's a buy signal here at 26. It's all the way up here at 30. All right. And let's see the next one here. Look at this one here. Okay. It was the buy signal at 23. It's all the way up here at 31. So that sector, because that sector is moving higher, these stocks, guys, these stocks within those sectors that are moving, those stocks are moving also. You guys see that?
Mm-hmm.
There's another one here. Buy signal was here. Price is all the way up here. Here's another one here. Buy signal was at 45. It's all the way up to 77. Okay. And then I think this is Toll Brothers, right? That's a construction services. Remember right here, right? US home construction, right? Okay. The higher the numbers here, the higher the trend. So this is at 42, right? So the higher the number, the more that it's trending. Okay. There was Toll Brothers at.
So the more it's trending means the more action it's getting.
Yeah, the more it's moving higher. Okay.
Also, it's only indicates that it's moving higher.
Yeah.
It doesn't mean if it's going down.
Oh yeah. So that's a good question, Bill. So yeah. So this number could mean that it's trending either way, either to the downside. It could be trending to the downside or to the upside.
Okay.
Okay. Very good question.
Thank you.
Okay, very good. All right. So, but in this case, we know it's trending to the upside. Okay. But the important thing here, guys, is this, right? We would stay away from all these sectors right here. We would stay away from the stocks within these sectors. Most traders, guys, they just randomly get into the market. All right. They just get, they like Facebook, or they like, you know, any stock that they hear about, and we just buy it, right? We don't want to do that. Okay, we want to make sure that, hey, the market condition is safe. It's just like anything else, right? We want to make sure it's safe first before we get in. So we want to make sure that the VIX, the volatility of the market, is low. Okay, we don't want a lot of volatility. We need to make sure that the indexes, right, the Dow, the S&P, Nasdaq, and Russell, okay, that they're holding. And then most importantly, we also want to know that the sectors that those stocks are within, those sectors are moving higher, okay, and that we only want to trade stocks, find stocks within the sectors that are moving higher. Okay.
Mm-hmm.
Okay. Very, very important. Okay. Understanding this is critical to your trading. Okay. And just knowing this information will put you far, far ahead than most traders. Okay. So let's take a look at.
So excuse me, one more question. Is this for day trading or like a swing trading or long-term investments?
This is for more swing trading, but you can use this. Yeah, you can use this for even day trading too. You know, because with day trading, let's say you're trading on a smaller time frame, it's the same thing. It's you know, it's nice to know if you're going long, right?
Mm-hmm. Mm-hmm.
You know, which sector to get into, right? And
what time frame would you go if it's a day trading?
Oh boy, I'll give you an example here. So let's you always want to let's see here. 1 second. Let's go. You always want to use as a day trader.
Mm-hmm.
I would say your daily as your foundation. Okay. So you would use your daily as your foundation.
Okay.
And then you could use your smaller time frame. Okay, so if I'm day trading,
Mm-hmm.
I'm not as quick as I you know, I'm not young anymore, so I don't like that quick action. You know, we had Ricky on the call last night. He trades on a 5-minute, 10-minute time frame. But I like a 30
minute. Okay.
a 30 or 60-minute time frame. Okay,
Okay.
so let's say, for instance, okay, so let's say AMD is not a good example. Let's do this. Let's do so let's say let's say we wanted to trade this ETF here. So ITB. Okay, so we would find a stock like this. Okay, you see this here? That's in the what phase? So we would look at the daily. So do your research on the daily. Okay.
Okay.
Okay, do your research on the daily. Make sure on the daily that it's in the advancing phase or the markup phase.
Okay.
Okay, advancing phase or on the markup phase, and then your trading window. Okay, you can use a 30-minute.
Okay.
30-minute, or if you've got the time and you're at home. So let's say you work at home, right? And you've got the time. You can put it to a 15-minute. It's 15 minutes is fast. Okay. But I like the 30. I like the 30. So what you could do is this. All right. So this is the daily. And here we can wait for buy signals. So here was accumulation in here, right? So if you look at your chart, accumulation, price, this is on the 30 now, right? So on the 30, we know our foundation, the daily is solid, right? So we know we are not in the declining phase. We are not in the distribution phase. We're in the advancing phase, right? Or markup phase. So we should be buying. So what we want to do is patiently wait. So patiently wait for a retracement on the 30-minute, and then a breakout on the 30-minute.
Okay.
It breaks resistance, we get a buy signal, and then we can get into that trade. Okay. Now this is the 30 minutes will still give you a nice, what the hope is that we can take a day trade and turn it into a swing trade.
Okay.
Okay, does that make sense?
Yes, definitely.
Okay, so as long as some day traders, they get in and out for that day. Okay.
Yeah.
What I like to see is if a day trade, if it holds, right? So if if price holds and continues into a trend kind of like this, just stay in, right? And capture more of the moves. Okay. If you really just want a day trade, you can do a 5-minute. Okay, a 5-minute is quick though, guys. Remember, every candle here is a 5-minute. Okay, so we can do the same thing, but guess what? We're gonna have to get out a lot sooner here. So the price opened up here. I would say that was about 9:30 in the morning when the market opened. Okay, got a buy signal here by 1 o'clock. Was that no? By about 3, 4 o'clock right here, there was a sell signal to get out. So we bought in the morning, sold in the afternoon, and then let's see what price did. Okay, so we got out here, we bought here, got out here, took profits, right? But then the price came down like this. So just keep in mind when we day trading on the smaller time frames, we just have to be really, really quick.
Okay.
Okay. Unless you really know what you're doing, I like the longer time. So a 30-minute, a 60-minute will still get you some nice trades. Okay. Okay. So just remember, the smaller the time frame, the quicker things are going to be. Okay.
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 Thank you.
The longer the time frame, the more time we've got to make decisions. All right.
Hi, David. I have a question about the buy signal. I'm new to all of this, so the buy signal generate a buy signal.
Okay, and you were breaking up. What's your question?
Oh, it's about the buy signal. how do you know when it's a buy? You're getting the signal to buy.
Oh, okay. All right. So let's do this here. We'll open this up here. That's a good question. Okay. Do you guys see the screen here?
Mhm. Yeah.
Okay. All right. And can you see the screen here?
Yes, I can.
Okay. So the way price works is like this. Okay. We want to buy. See this blue arrow here? See this blue arrow? And it should
Yeah.
say buy. You see the word in here, buy?
Yes.
Okay. So we want to buy when price breaks resistance. Okay. And just think of resistance as your ceiling. Okay. And there's a battle between buyers and sellers. Okay. So there is a battle right here between buyers and sellers. So buyers are looking to push price down. Sellers are looking to push price up. Okay. Think of your candles as price. So they're short sellers. We call them short sellers. So the shorts are looking to push price down. The buyers are looking to push price up. Whenever the price is pushed up and breaks resistance, that's our buy entry because now the buyers are in control. Okay. Support is right here. So when price breaks support, think of support as the floor, right? As your floor, right? And so now the shorts, the sellers are looking to push price down and the buyers are looking to push price up. When the price fails, when the buyers fails to push price up and the sellers win, okay, and they're able to push price down, we want to sell. Okay, so we want to buy on the break of resistance and sell on a break of support. Okay, so write that down. We always want to be buying on a break of resistance, and we want to be selling on a break of support. The reason we want to sell on a break of support because the buyers are no longer in control, right? So the sellers are in and they could push price lower. And we don't know how low they can push the price, so we have to get out.
Gotcha.
Okay, so I'm going to go through some examples. That's a really good question. So what we've done is we use algorithms. Okay, so this is where most traders mess up in their entries and the exits. So what we've done is we've got built-in algorithms. So the system will tell us on the screen and send us an email, okay, as to this buy and sell signal. So here, price broke resistance, these lines right here, this is our resistance lines. Most traders have to draw these lines in automatically, guys. So the system does it for us, okay? Most traders have to draw these lines in manually, but the system does it for us automatically as price moves, okay? So follow me for a second. Price broke resistance here, so we should be buying. We bought. This is in the markup phase, right? Price broke support. We should be selling. We've got red candles. We got a sell signal right here. We're out. We're out. This here, this is in the distribution phase. Okay, distribution phase until price breaks resistance. If price breaks resistance, guess what? Now we're in the markup phase. So price broke resistance. Okay, we got a buy signal here, but guess what? Price failed. Okay, price failed, broke support right here, broke support. So we got out and we got a sell signal to get out because the buyers are no longer in control. You guys see that?
Yeah.
Okay, so price went down, moved up. Guess what? Price broke resistance right here. We got a buy signal because the buyers are in control. Okay, and while we're in the markup phase, so now we're still in the trade because guess what? The buyers are still in.
Station.
Okay.
Okay.
So what we want to do is we want in the advancing phase and the markup phase, we want to stay in the trades as long as possible, guys. Okay, as long as possible. If the trade goes against us and the sellers come back in, we want to get out quickly, kind of like here. So we want, when we trade, we want small losses and big wins. Okay, we want small losses, big wins, because we need the big wins to pay for all the small losses. Okay.
Right.
Small
I
losses.
have a question, David,
Yes,
whenever you get a chance.
yes. Go ahead, Ann.
This may be a dumb question.
Mhm.
Are there any opportunities to set up a stop loss or take profit, or it's not
Okay, so
necessary in this system?
yeah, so Ricky mentioned this last night with a stop loss. The issue, we don't provide stop losses. I don't recommend putting stop losses on your trades, okay? And this is why. So what the institutions will do, and the market makers, they'll run your stops, okay? So if you guys notice right here, they anticipate, we always want to anticipate a pullback. Okay, so whenever we get into trade, always anticipate a pull or retracement before price moves higher. What most traders will do, okay, is that they'll put a stop loss right below support. So they'll put their stop loss right below support. And what happens is price will come down, hit their stop, get them out, and then
go back.
and then go back up. Okay.
Yeah.
And what happens is this: when you put, say you trading with any brokerage firm, okay, you know, they see your stops. So you put your stops on your platform and they see your stops and they will run, we call it running your stops. Okay. So we don't want to do that. I'm trying to find some examples. I'm going to go through a few examples here so you guys can get an idea. So we don't want to put stops. Second here. You guys see this here, and when you start looking at these charts, you'll see it over and over and over. Here was the buy signal here, price retraced. Okay, as long as price holds support, we are good. See here, you guys see this here?
Yeah.
Yeah. So price, here was our buy signal. Price came down, held, never broke support. Okay, most traders would have gotten out. Most traders with their stop loss would have been anyway in this area here, right? And they would have gotten stopped out. We never got a sell signal. We never really broke support. The sellers never really came in. So guess what? We held the trade, and guess what? Moved all the way up.
Right there.
Okay. You guys see that?
Yes.
All right.
So what then do you do
Walmart,
if
baby.
All right, guys, help me with the background noise there. Okay, someone have a question?
and
Okay, and go ahead.
so I've always heard that, you know, to put the stop loss on to prevent you from losing, you know, too much. So what happens if it keeps going down? I guess it's just best to watch it so you can just hop out of that trade.
Yeah, so what we want to do is so write this down. Okay, write this down. We want to sell at support. Okay, so let's take a look at this, your example, right? So rather than putting a stop loss when the sellers are in, when the sellers come in, we just want to sell and get out. Okay, so here is our buy signal here. Price broke resistance. We got a buy signal, failed. Price failed to trend. We broke support right here. Right, you see here, you see this white triangle right here?
Yes.
Yeah.
White arrow, this was our sell signal to get out. So we got a small loss here, okay? So we bought here, got out here, that's a small loss, but guess what? We're out and we are not in the trade as the price moves lower. You guys see that?
Yeah.
Okay, so we're taking a small loss rather than a really big loss, okay? Because when price broke support, guess what? We got out, we saved, protected our account. Okay, so what
David, I'm sorry, the where it says long liquidate, that arrow, that's the sell signal, correct?
That's the sell. That means we're liquidating, we're closing, we exiting our
Right.
long position. Yes.
So what's the little sideways arrow pointing to the left that you just had your cursor on? What does that indicate? That
Right.
one.
This one right here?
Yeah, what does that do?
Man, you guys are smart. Okay. You guys are smart. All right. Okay, so let's see here. All right, hold on. Okay, so this arrow points to this candle. So this is a 240-minute time frame. So this whole candle here holds represents 240 minutes worth of data. Okay, so this arrow points to this candle. Okay, but this triangle here, you notice here, price, this is your support line right here, right? So when price hit that support, this triangle is our price. That's the exact point of this candle where we got a sell signal. So this is the whole candle here, but it's right at this point here is where the system triggered a sell signal, because guess what? Price broke that support.
Okay.
It never broke support in here. It broke support when price hit right here. So this triangle right here, okay, that's the price. So this triangle represents right here. This triangle represents 124.34. Okay.
Okay.
That makes sense?
Yep. Thank you.
Okay. Very good question. This triangle here, so this blue arrow here, this candle here, so this is the candle. So the arrow is pointing to this candle here, okay? So on that 240-minute time frame, not this one, this one here, okay? And now this arrow, when price hit this arrow right here, that's $124.54 is where we got the signal to buy. Okay, so the arrow represents the candle. This triangle represents the area within the candle, the price within the candle where we got the signal. Very good question. What phase is this? What phase is this?
Markup.
Markup. Very good. Okay. This is why we use automated trading systems. Okay. Because guys, we want to be accurate and we want to be quick, even on a 240-minute time frame. Okay, you know, when we trading, because we're trading with capital, all our emotions will get triggered. So here was our buy signal. Follow me for a second. Here was our buy signal here on a break of resistance. Price failed, broke support. We got red candles coming in. We got a sell signal. This candle right here. This triangle right here. To get out, we got out. Guess what? Price came all the way down. We were out. We didn't sustain this loss. Okay. Price broke this resistance here. This resistance here. Give us a buy signal here to get in. We got in. Price failed. We can't control price. We never know when price is going to trend. Okay, all we can do as traders is react. We can only react. So price, the buyers came in, we got a buy signal. Guess what? They failed to move price higher into a trend. Guess what? Price broke support, we got out. We took a small profit here. The blue dotted lines means we made money, right? So blue lines, we made money. Red lines, we made a loss. So we made profits, a small profit. small profit. But guess what? We did not take this big loss. We did not take this big loss. You guys see that?
Yeah, it's huge.
Yeah.
Yeah.
Yeah, it's a big deal because guess what? When the shorts come in, a lot of times we think, hey, it might just retrace a little bit and keep going. But guess what?
Yes.
Sometimes that doesn't happen, right? So
Most of the time.
yeah, most of the time it doesn't happen, right? So
But
we
if you
wanna-
wanted to day trade this
Mhm.
and you bought on November 15th, you could have made some money on that increase, right?
where here?
No, on November 15th, where we get the buy signal.
Okay.
If you were going to trade this on like a 10 or a 5-minute, it went straight up there for a day or two, right?
Mm-hmm. But what's yeah, absolutely. But what's more important here? What's the lesson here? What's the lesson here?
Don't be greedy.
Just follow the trend. I'll
But,
just
but really, it is the lesson. You know, I guess it really is.
Mhm. But what's the real lesson here? What if we look at this, what I just explained, what's the real, what's the think now, just think about what we just went through. What's the advantage, I would say? What's the advantage?
So if our plan was rigid and our expectations were flexible, we would have made money on both those moves. Getting in on the sell or on the buy and getting out on the sell signal.
Yeah, but that's not the major advantage here. What's the major advantage here?
Limiting losses.
Limiting your losses.
You didn't lose big.
Yeah, that's your biggest. Listen, you know, protecting your downside risk we can always get back in the game if we minimize our losses, right? So if and that Travis, I think Travis mentioned that. Say, so guys, listen, this right here will hurt you. Right here.
yeah.
This right here will hurt you. This right here will hurt you. Okay. You know, we always want to be defensive when we trade. Defensive, protect our account, protect our account, protect our account, protect our account, protect our account. When these sellers come in, they can get really, really aggressive. And we just don't know, like Bitcoin right now, the sellers are in, the sellers are in, the sellers are in. We got out. Here was our buy signal. Sellers came in here. We broke support. We got out. Okay, so we got out here. Okay, we actually got out on the 240-minute time frame. So we got out, and I'll show you guys here. This is very, very important. Our major goal, our first goal is to protect our account. Okay, we protect our account and then we look to make money. We can always find another trade, always find another trade. So we got out on Bitcoin on the 240 at right at about 62,000. Okay, and we've been out. Here it is now at 48,000. Okay, that's a big that's a big drop. Okay, and guess what? That's why these 4 phases are critical, right? It's in the declining phase, the markdown phase, all through here, guys. Okay, so we don't want to be on this side. We want the other traders to be on this side, right? We want to be either out, okay, out and just protect our account. So this signal here to get out, yes, we took a small loss. This red dotted line is a loss here. We took a small loss, but guess what? We are not in it taking a big loss. And guess what, right? Look here, look here. we had a nice win, right? So we had a nice big gain, and we had a small little gain. This big gain will pay more than pay for this little loss. And guess what? We're out and we'll wait for the next trade. So remember, when price breaks support, the sellers come in, red candles, we want to be out. We want to be out. And we want to wait. Right? So at some point in the future, price, Bitcoin will consolidate. Okay? And once it consolidates, what phase will it be in? Once it consolidates between support and resistance, what phase is that?
Distribution.
Nope. What phase is that? Once it
Oh,
consolidates,
the
Markup.
accumulation phase.
accumulation phase.
Okay.
Okay. Guess what? I'm gonna find, let's see if I can find one here for you guys. Okay, I want you guys to check this out. Check this out, okay? How we win at this, and we can do this over and over and over. All right. And then I'll let you guys go for the evening. All right, follow me here for a second. So this is Forex, right? This is Forex. So here was the markup phase, advancing phase. So we bought here, buy signal, sold here, got out, price broke support, failed. We can go long and short, up and down, right? So it failed here, okay, but we didn't give up. We stayed in, it broke support again, and then we took this trade. So we made money here, and guess what? Price broke resistance here, we got out here. Okay, we call this the meat of the trade. We'll never get the very top, and we'll never get the very bottom, because price needs to break resistance for us to get in, and it needs to break support for us to get out. Okay, so we call from here to here the meat of the trade. So write that down. We always want to get the meat of the trade. The meat of the trade. Okay, same thing here. We never shorted the top. We got the bottom here on a break of support. Never got out at the very bottom. We got out when the price broke resistance. We got out here. Okay, now this is in the markup phase. Price has retraced. Okay, price has retraced here. We'll wait to see if it holds support. If price holds support and moves higher, we'll stay in the trade. Okay, if it doesn't and breaks support, we'll get out. Okay, let's say it breaks support here, we take a loss here. So let's say we had a loss here, we had a loss here, we had a loss here. Okay, we had a loss here, we had a profitable trade here. Do you guys think do you think when we take a look at all of this trading here, did we make money or did we lose money?
It made quite a bit more than you lost.
We made quite a bit more, okay? Because our losses was kept to a minimum, small losses, big wins, okay? Small losses, big wins. But remember, when price breaks support, we want to get out of our long position. If we can go short, then we want to go short, okay? All right, anything else, guys? Anything else? Does this help? Did this help you guys at all?
Yeah, this is great.
Yes.
Yes,
Yep,
it
that was
is.
good.
Thank you, David. Thank you.
Awesome, awesome, awesome. So I will see you guys. If you don't have any questions for me, I will see you guys on Sunday. All right.
Okay. See you
Okay.
then.
All right, guys.
Thank
Take
you.
care.
Thank
Have a good
you.
weekend. Take care.
Thank
Bye-bye.
you. Thank you. Bye.
Bye-bye.